Welcome to Inside Marketing with MarketSurge, your front row seat to the boldest ideas and smartest strategies in the marketing game. Your host is Reed Hansen, Chief Growth Officer at MarketSurge.
Hello and welcome back to Inside Marketing with MarketSurge. Today's guest is someone who doesn't just talk about networks, he's built one that actually prints opportunity. Joe Santaularia is the EVP and Director of Strategic Investor Relationships, Capital Placement, and 3PL Partnerships at Bradford, where he's closed over 6 million square feet in deals and consistently ranked as a top producer. But what really sets Joe apart is how he's engineered his own ecosystem, bringing together commercial real estate, supply chain leaders, and 3PL partners into a high-performance network that doesn't just connect people, it accelerates revenue. He's also serving as president-elect of Corfac International, a global CRE alliance that proves one thing: in today's market, local expertise wins. If you've ever wondered how to actually build relationships that turn into deals and not just LinkedIn noise, this episode is for you. Thanks for joining me, Joe.
Absolutely, Reed. Thanks for having me.
So everyone says, Joe, there's so much to go into in your background. You touch so many interesting spaces, but I'd love to start with networking, because I think it's a very valuable skill that everybody should have, but especially for entrepreneurs, people that are selling services or selling their expertise. A lot of people say that your network is kind of like your net worth, but most people's networks are not helping them at all. What do you think people are underutilizing with their own networks or doing incorrectly when it comes to networking?
Absolutely. A lot of people source their primary contacts from events or their most important contacts from events, where that's a great place to start, but that's where typically the terrible networkers go. So it's about growing your network 1, 3, 9, 81, 6,500. And the way to do that is find multipliers, other networkers that are good at networking. But you also have to keep in mind that there has to be overlap, where your economic buyer and their economic buyer need to have that same industry, size, etc., as well as you need to make sure that you interconnect your connectors as well, where a lot of people are the primary, they guard their network and guard their best contacts, where really you need to interconnect them, where it's almost, think of locks in the Panama Canal, where your best networkers in your network get up chain. The worst networkers stay down here. So you almost create your own supply chain with your network.
Yeah, no, that makes a lot of sense. So, in a way, you've kind of built an ecosystem. It helps service itself and helps like self-generate. I think it's something that you're doing that's unique that other people are not. One thing I'll just point out is I've been on the receiving end of several of your introductions, which I really appreciate. But, is it something intrinsic? Like, do you just really love this? Is this like something you crave, these kinds of connections?
Yeah, I backed into this process. I backed into supply chain where, I started in 2009 and I was an atypical real estate broker, tenor up industrial, where you just cold call. You walk up the ramp, find the old guy in the forklift, and you wrestle him to the ground and try to help him with his renewal, expansion, relocation. And there's 18 other guys and gals trying to do the same thing. Just got to a point where I needed a different strategy to differentiate myself, and found that I had a soft skill where I can do this really well and much better than anyone else. And most of these networking conversations, as long as they're with collaborators, they're battery charging events or battery draining events. So again, do things that charge you and figure out a way to put that into your formula, and you'll scale faster because you have way more energy when you're doing things.
Yeah. Okay. No, I love it. So specifically, you have a huge network of supply chain and logistics and 3PL partners. Building within a niche, is that different than just building broad? I think you referenced the overlap. Was there a point where you made a conscious decision that you'd focus on a niche or do something different to keep that focused?
Yeah, and again, going back to commercial real estate broker 101, most people are told to focus on a geography rather than an industry. And not to say that's unproductive. It's just you're doing what everyone else is doing. But I also backed into my process where when I first started networking, it was financial services, bankers, accountants, attorneys, fractionals. And again, you just run into a lot of bad networkers when you're in that industry. I met an import-export guy and realized I need to be hanging out in supply chain. The interconnectivity in this industry is off the charts. And my process of continually bringing people together helped me scale this ecosystem.
Okay. So, as we talk about this, I know 3PL in commercial real estate is a big part of what you do. And as we talked about earlier, and there's an audience in this among listeners of this podcast that include 3PL, but a lot of people that are in a lot of different fields. So I guess broadly, now I'm not a CRE expert, but broadly, we're seeing reduced demand in some areas for commercial real estate. I am based in Chicago. I see in the news large downtown office spaces are selling at a huge discount or a huge loss. Where do you see the growth opportunities for commercial real estate? What should businesses be mindful of, like whether they're investing, looking for space themselves? Where are the opportunities here?
Right. The opportunities are, I'm going to say, in micro niches, where if you break down the three major food groups, say industrial was overbuilt coming out of COVID just due to the overactive demand, Amazon taking up 33% of the space for a year or two. That has shut off, but there was never enough development to fill or build warehouses, say 0 to 100,000 square feet. So it's still pretty white hot for businesses that are coming out of their garage or expanding from 20 to 100,000 square feet just due to the lack of development for those types of spaces. And that's really nationwide. The bulk space has recovered, but again, any cowboy with a pickup truck is going to start developing once the vacancy rate, it's a number, say, below 7%. And office is similar, where it's also, we'll call it a tale of two cities, where areas of every city got decimated due to, we'll say, three different shoes that dropped. One, rental rates plateaued in 2016. So people that bought buildings 13, 14, 15, 16 did not see the increased value that they were expecting. So their returns flattened out. Then the double whammy was COVID, where the pendulum swung to the right or left, where people started working from home. That's coming back, but it's not going to revert to 100% of normal. And then lastly, you have the debt crisis where interest rates effectively doubled. That wiped out a lot of my peers who thought debt was going to be free for, forever and ever. So, basically certain 80% of assets are underperforming, but you have this 20% of assets where they're well located. They're around, business owners that they have employees that work, 2 miles away from the office. They want to see their eyeballs every day, and they're in the office every day. But the bigger firms, where those firms' office, those assets are hurting. So we look for assets that are in office that are located in A markets where tenants are trying to escape the rental increase, because we're in the hottest office market in the country, which is uptown Dallas, or maybe one or two, depending on what you consider Midtown Manhattan. But yeah, we target these buildings that are great, that have great bones, but just had terrible stewards. People that bought them in 16 are, thought office was a sexy asset, decided to roll the dice and they lost. So that's our strategy. Is there's still good assets in every class. You just got to be picky, and you got to know how to operate these assets into cash flow, and then operate them into profit. Where again, we're chasing 20 to 30% returns.
It's fantastic. Now, there's a lot of forces at play here, and helping drive the growth of uptown Dallas and office space. When you look ahead, so do you look at global trends? Do you look at like energy prices or the health of the stock market, or do you look at more localized trends? Probably a little bit of everything, but what would you look at for a year out?
So it's both, where you have operational risk and you have capital markets risk. Global trends are going to affect the capital markets risk. Local trends are going to affect the operational risk. Since we're basically a data and analytics company, where we do 700 deals a year, we know what's going on in the local markets. We know when and where rental rates are going up, when they're stagnating, we know where population is flowing to. So we feel we have a very low operational risk just to what we do day in, day out on our third party business. Capital markets, we're at the whim of any administration, any supply chain risks. It's supply and demand. So institutional dollars are flooding industrial right now, but they have not come back to office. I believe that will change, but tariffs and the war in Iran have slowed that down. Where, we were hoping it was a 26 conversation, but that's looking like 27 now. And, interest rates, they're probably going to stay pretty stagnant for a little while, or flat, just due to, everything that's going on globally. But that doesn't affect us. That just means we're still getting the same returns. We're just holding on to our assets another year or two than we expected.
Okay. Got it. So maybe if we could go back, I want to touch a little bit about networking again. Now, you do this all the time. You're making relationships. When you're making what you'd call like alliance and a business arrangement where you're either contractually tied to each other or you have a co-offering, how do those come to be? How do you decide, like, I'm going to take this beyond just an introduction to let's put pen to paper or let's go to a pitch together? How do you find those kinds of opportunities for an alliance?
Yeah, so most salespeople are looking for leads that turn into deals, that turn into customers or clients. What you need to do is get above the hamster wheel where find deal, close deal, find deal, close deal. Whereas I'm looking for partners. I can feed other partners to them that can feed them opportunities. I can feed them opportunities. They can connect me to their peers in their industry where I can find opportunities with them. And then I can help them with real estate transactions. For me, those two types of, archetypes are 3PLs on the industrial tenant rep side, and then family offices on the capital side, where, I get in front of family office. It's not, let me sell you my fund. It's, what do you need? Who else can I introduce you to? No different than the 3PL where, like, for example, there's 3PLs that do high volume. Some do bulk. And these guys need to be talking to one another where they're passing up on leads. And so you interconnect them so that they can both grow in capacity. You just have to have a good relationship with the guy or gal that's driving the real estate needs for the company to know that you're protected on that side. And it's all about reading character, where there's low character actors in every industry. There's high character actors in every industry. And you're chasing character. You're not chasing money.
Okay. And I was going to ask you about that. There certain red flags. So character, are there things you can pick out quickly to determine, like, this is not going to make for a good, like, character fit? Anything you pick up on?
Yeah. Honestly, it's really easy where every conversation is a trading event where I'm throwing people at them. And if I hear crickets from the other side, I know this relationship isn't going to scale. So I'm baiting people to be collaborative, and the ones that aren't collaborative, I keep swimming. I keep them in my CRM. I drip on them, but it's either timing's off, that a plate is full, or they're just not my guy. And that's okay, because there are 20,000 3PLs out there, and I only need 5 or 6 in my Rolodex to be successful. So you're playing the odds game in a different way.
Okay. No, that makes a lot of sense. And I think it's pretty informative. I don't know that I'm like a natural networker, and, I like to learn from people like you, but at the same time, I'd like to be better. I'd like to, like, behave in a way that sends the right signals. And I think that's good to know that, like, certain activity is happening on my part that flags me as, like, energetic and an enthusiastic partner. So I think that's really helpful. Can you tell us a little bit about Corfac International, your president-elect? Tell us a little bit about that organization and how it works and what's the future, when you step up to be president.
Yeah, totally a very fun organization for me to be involved in. Corfac was started in the mid '80s. It's a twist or a competitive edge for local brokerage shops against the alphabet brokerages, Seabury, JLL, Cushman, Colliers, go down the line. It's 80 of us stationed across the world, North America or US heavy. or say there's a Dallas partner, there's an LA partner, there's a Charlotte partner. We meet twice a year, just keep the relationships up, but it helps us win business where we're passing opportunities back to one another. We're pitching business together, and we're also talking best practices where we had a great session on, balance sheet. What should your balance sheet look like? And how and what is a sign of a healthy balance sheet and non-healthy balance sheet. So it's kind of like an independent board for these young and upcoming and seasoned brokers to again just make their businesses more profitable. It's not, we aren't looking for the alpha broker in the room. We're looking for the collaborative broker in the room, one that wants to get better, the one that is highly energized and a hard worker, just like many of us.
Fantastic. Well, I think that's obviously an important organization that a lot of brokers should explore. You're taking on new members, I assume.
Again, it's one per city. We have a few, call it blind spots, where say, I don't know, like Washington, D.C. and New Orleans come top of mind, but we're actively trying to grow into, say, South America and in Asia. And I think France and Spain are the big blind spots in Europe.
Wow, that's a significant footprint. That's awesome.
Yep. Yep.
Well, Joe, just as we talk, you're a great collaborator, great guest with a lot of knowledge in this space. If people would like to work with you, whether as, maybe they've got a collaboration or alliance opportunity with you, or maybe even have you as a guest on a podcast, where are the best places that people can reach you?
Very visible and active on LinkedIn. That's an easy one for me. An email, joe@bradford.com is an easy way to reach me, as I do monitor those, daily.
Awesome. Well, Joe, thank you so much for joining the podcast. This is super valuable. I think networking we talk about it a lot. I don't know that many people do it well. You do it well, and I think we could definitely learn from what you're doing, and appreciate your time today.
Love it. Thank you, Reed, and look forward to the future efforts between us.
Thanks a lot, Joe.
Want to stay ahead of what's actually working in marketing right now? Head over to MarketSurge.io and see how we're helping businesses grow smarter, faster, and louder. That's MarketSurge.io, because your next breakthrough shouldn't be a guess.